Hey everyone. Since the onset of the pandemic, there's been an upswing in capital movement across the US. Investment into smaller cities has risen sharply, and the volume of interstate investment has surged. Investors choose to buy out-of-state commercial real estate for a multitude of reasons: diversification, higher yields, tax policies, retirement strategies, to capitalize on unique market dynamics like migration and demographic trends, or simply because they like a particular asset. In the first quarter of 2020, before the pandemic, 53% of the total commercial real estate dollar volume was in secondary and tertiary markets. That's up notably from 2011, when about 47% of the dollar volume was in these smaller cities and 53% was going into primary markets. But over the last 2.5 years, the share of investment dollar volume going into secondary and tertiary markets has climbed to 58%, the largest share on record. This influx of capital has contributed to the yield compression in these areas, reducing the yield premium offered by secondary and tertiary markets relative to primary markets. Cap rates in tertiary markets are now just 1.1% higher than primary markets, the tightest spread since 2009. To illustrate the rise in capital movement, I'm going to share some interstate sales data from Marcus & Millichap. In 2021, Marcus & Millichap clients acquired nearly $26 billion of commercial real estate outside their home state. And that pace accelerated in the first half of 2022. Texas has seen the greatest increase of inbound capital. In the last 12 months, Marcus & Millichap moved nearly 4 times more investment into Texas commercial real estate than in 2019, the previous peak year. The Northeast, Southeast, and Mountain regions have also seen gains, with the inbound capital over the last 12 months nearly doubling the 2019 level. As for the sources of capital, virtually every region had a sizable increase in the dollar volume exported, led by investors in the Mountain region, which exported more than 3 times as much capital in last year compared to 2019. But the dominant source of exported capital over the last 12 months was California. The amount of capital coming from that state alone was up by 3 times compared to 2019, reaching $11 billion. Marcus & Millichap facilitated another $7 billion of capital coming from the Northeast, led by $4.1 billion from New York. Granted, this interstate transaction data solely reflects Marcus & Millichap brokered transactions, so the trend may vary from the market as a whole. But the influx of capital movement is telling. It suggests increased interstate competition for local properties. Out-of-state investors bring different perspectives, different objectives, and different decision drivers. For example, an investor planning to relocate to Florida from New York may have significant state income tax considerations. By selling investment properties in New York and acquiring properties in Florida or Texas or other states with low or no state income taxes, they may be able to generate a stronger after-tax yield. That investor may be willing to pay a premium for a property because their state taxes could mitigate some of the yield differential. Another interstate investment motivator could be yield. Selling a property at a 3 or a 4 cap in a major primary market in California, for example, then buying a 5 or 6 cap property in a growing market in another state, thereby boosting cash flow. It appears that a lot more investors are looking at a bigger range of investment opportunities beyond their own backyard. They're becoming more active in other states as a way to diversify and maximize returns. It's another way investors are expanding their perspective and keeping their eyes on the horizon.